Hey everybody, hope everyone is doing well, profiting well in this market. So this video is going to be my take on the two patterns beginners should stay away from. But before I continue to explain, hit that like and subscribe button. It'll help me out a lot. It'll give me motivation to keep on making content and videos like this for you guys. So I'll be going through these two patterns, and I'm not saying that you can't make money on it. But what I'm saying is it's more difficult than your average go-to patterns. There's a lot that goes into it. There's a lot of criteria. There's a lot of experience that goes into it, just knowing how these stocks move. So I'll go through the first one, and the first one is a morning fade. And as you can see on IZEA, this is the daily chart. I'll be zooming in on this red day right here. So this is the intraday chart for IZEA, and as you can see, it's not really a panic. It's just kind of slowly grinding down for this morning. It was pretty much grinding down for an hour, just downtrending. And the reason why it's difficult to try to catch the bottom and expect a bounce is because with these slow grinders, you don't really know exactly where it's going to end. Sometimes they could drop 12-15%. Other days, other stocks can go down 30 or 40% before they even bounce. And one of the issues that people get into is if they don't cut their losses, they'll start averaging in. So for example, let's say at 10 a.m. you got in right here at $2. Your mindset is this. You're thinking, okay, $2 is a round number. There's probably a lot of support there. I don't know if there's any. Yeah, so there's somewhat support even in the pre-market. So let's say, for example, you're like, okay, $2 is the bottom, like that's it. So you get into IZEA at $2 and you're not really selling over here. Let's say you miss the 220 mark over here by accident. You're like, oh, whatever, like it'll keep going. But guess what? Over here, when it breaks that $2 mark, it keeps going. And guess what? You're down another 25 cents. So if you're averaging in on the way down, your average might be around like 190s, maybe like high 180s, depends how you average in. But who's to say that it doesn't go lower? You know what I mean? It broke your first your first support. Who's to say that it doesn't break your second support? So I'm not saying that there isn't a way to play it. I do play this, but there are certain criterias that I look for in order to profit on the morning fade pattern. It's not my typical go-to. If I see other opportunities, I'll probably go for other opportunities like a pullback on a first green day or something like that. But if the situation is right, the stock is right, I'll probably play a slow grinder if the criteria is right as well. But in general, these slow grinders right here, when they kind of slowly move, it's difficult and dangerous for the long and the short side. For example, if you're shorting a stock and it's slowly grinding upwards, going against you, those are really dangerous to be in if you're on the short side. At any moment, the shorts will get squeezed all at one time, and they'll just kind of have the same effect as this level did right here. So it'll just hit a certain level and everyone will get squeezed at one point and the price will just skyrocket. So in general, slow grinders aren't the best price action plays to get in for beginners. So that was the morning fade. The second one I'm going to show you is halts. So for example, on GNUS, I'm going to zoom in on this red day right here. So again, this is the 2-minute chart. Each candle is 2 minutes. So one sec, I'll get it. Perfect. So each candle is 2 minutes. And as you could see on the daily chart, it was way overextended. Panic was going to happen. It was inevitable. The reason why I'm including it in this video is, let's say you're kind of new to the stock market, you're a beginner, or you have a small account and you're looking at this bounce right here. It probably looks really tempting for you because if you're seeing this, that it found its bottom at like 420, 450, and the high was about 820, 850, you're like, wow, that's double your money. Let's do it. Wrong. Terrible choice. So, for example, if you're Billy the beginner over here and you're trying to pick a previous support level, so let's say you're looking at this consolidation area right here, and you're like, okay, $7 is a decent support level. It'd be down like 30 or 40% from its highs. At $7, I'm gonna get in. Guess what? Gets halted. Millions of other shares are trying to get out. Stop losses are now turning into market orders when they get hit, and there's way more downside coming. So they usually don't drop like 20-30%. They usually go down like 60, 70, sometimes 80% before it even finds a bottom. So there's a lot more risk than there is than you want to deal with. Like, you want to be able to sleep at night. If you're a beginner and you're trading with a small account, your goal should be to take the safe profits. So I'm not saying that you can't profit on GNUS. For example, on this one right here, I made $1 a share. I caught the bottom and I made $1 a share. But what I'm saying is, if you're a beginner, this chart and the morning fade isn't for you, only because there are a lot of traps in there. There's a lot of criteria that goes into it. So maybe if you have a lot of experience in the market, you can start recognizing it. But if you're new to the market, in my opinion, stay away from panic halts and from morning fade patterns as well, until you start understanding how they move, how to kind of dip by them, how to profit on it, how to manage your risk on them too. That's a huge part. So yeah, that's my take on the 2 patterns to stay away from if you are a beginner trader. Thank you.